Hello and welcome to the Monday edition of the Trading Podcast with me, Russell, and
me, Chris Pollock.
So Chris has been away for a couple of weeks, so I've been trying to hold the fort, which has been difficult to say the least. Having to pull in guests from left, right, and centre and up my trading knowledge game.
Who have you had on? Who's been
last week I had Barvin, so it was all about cryptocurrency. So maybe the guys were missing Zee. He was like the new Zee.
Okay.
The new Zee. And then we had a discussion about business with Brad. And,
I saw that one.
Yeah, so...
the right answer was Brad.
Yeah?
who was the best? I would have thought you know...
Oh, okay, right.
You got to look after the management here.
Okay, yeah, Brad, if you're watching, you were the best, yeah. I'm definitely going to cut this out when I edit this.
So it's been a busy week. I was indeed remote, so it was a little tricky. But yeah, we're looking back on last week with the Federal Reserve. It's probably a good place to start.
Indeed.
Only got another one meeting this year. And Powell was, we had a bit of a washout for those of you guys who were on the call with us. We saw that big flush in the first, straight after 6:30, straight after the press conference began. And it didn't last too long before we managed to anchor ourselves back up ahead of the big earnings that came out later. The feeling is that they're not like pre-committing to this extra cut. In fact, if we can already toggle to the Fed rate monitor tool, is this sharing already?
Yep. No.
Cool. Then you can see that it's kind of in the balance. There was a view that we were going to get 3 cuts this year, as of the last meeting, and then and that's now probable, but not highly probable. We've got a 62% chance that we get that extra rate cut. Still a pretty good outside chance that we don't. And in a world of very little economic data, still no relinquishment on this government shutdown, no non-farm payrolls this Friday again.
I think Trump's going for a new all-time record, right?
Well, this is what he was trying to do with the earnings themselves, right? He doesn't want companies to report every 3 months anymore. He's like, it takes too long to tell people the truth. Why don't we just keep it all grey, keep it all quiet, and then we can just tell them the bad news way later down the line. Maybe there's something to that. I mean, maybe it's a little bit more nuanced than that when it comes to the government shutdown. But nevertheless, we aren't getting much news. We do, though, this week have a little bit, which we'll get to. But in the absence of this news, you're going to really have to rely on other things, to probably central bank speakers, to get a feel of whether they're going to hit this other cut. Stephen Myron was on Bloomberg this morning. He's not guaranteeing he's going to dissent next time if they don't do the cut, but I'm sure he will.
Well, I heard an article that a lot of these firms, obviously not for the Fed rate decision, but for other decisions, they're actually turning to private companies that are creating the numbers themselves. So,
well, that's why we have these numbers, really. I mean, it's more useful now. Like ISM, the Institute of Supply Management, they do the PMIs for the manufacturing and services. Manufacturing this afternoon at 3, services Wednesday at 3 o'clock as well. It's good to get these things, and ADP as well. They do non-farm payroll figures, but I mean they are not a great indicator.
I think that's what I was. That's what I heard. Yeah.
Yeah. So I wouldn't be trying to trade ADP non-farm like the real non-farm.
Yeah.
But if it's a huge surprise, then I'd be interested. I think if you get some big shocks in any of these numbers, it's going to move the market because hey, what else have we got to go on?
No, that's right. And there's no let up yet. I don't know how long this is going to go on for. With the other week, we were saying what was the record? It was
38 days.
38 days.
Yeah. Was it that long? 29 or 31 days in 2018-19, I think.
What are we on now? Day? Do you know?
Well, we're over a month now, right? Because we didn't get the last non-farm payroll, so I think we must be 5.5 weeks in now.
Wow.
And no seeming sign of that changing anytime soon. Not hearing any rumours. I did hear over the weekend that maybe the 1st might be the opportunity to make that happen, but we're not seeing that. We didn't get that government reopening on the 1st of November. So who knows, Russell? We shall see.
Who knows? Indeed.
What else we had last week? We had earnings. So 6 of the Mag 7 reported their earnings last week. So it's always a huge week for tech and for the US stock markets.
Yep.
Should we have a look at the winners and losers?
We should. I think the students behind us got smashed last week on all of this all of these earnings and stuff like that.
Got smashed, as in their ass kicked, or smashed because they had such a good day?
No,
yeah.
For the negative, yeah.
Oh, well, I hopefully you heard my warnings. I don't like trading these ones because I've had the same experience. I find trading the tech earnings very difficult. The market is so fast.
Yeah.
And there's very little liquidity in the markets after the markets close. There's much more liquidity in the pre-market open. This is why I like the Dow components. We got McDonald's on Wednesday. That'll be one I'll be focusing on. Those have been good this year so far, the Dow components. Caterpillar was good. What else do we have? Honeywell, I think we did well. We had a couple of good ones last week. But these were not good numbers, or not even the numbers, really. The numbers were fine for Meta, but it was the ramping up of the CapEx, the capital expenditure that they're going to have to throw into the AI mix. Investors didn't like it. It was just, they were already going big, and now they're going bigger regardless.
I think it's turning into a bit of a AI race, you know, a bit like the VHS and Betamax. And...
Wow, you're really hitting the target audience with that one. Just me and you know that one. But we're seeing 13% decline before the markets reopen the next day. We're not kind of at the same sort of price here. So Facebook was the real loser last week. Likes of Tesla, Apple, it weren't so bad. They're kind of as you were. Big winner, Amazon last week. That's been the one that's kind of moved and sustained the move. Basically up 10% from where we were. Hell of a day for that one.
Even with all their outages and stuff like that.
Yeah, well, that was tricky for my trading platform last week.
Oh, was you affected?
Yeah.
Oh, wow.
I wasn't trading for it was the last Monday. Trying to remember the day where I was like, okay, I'll do something else for a few hours. It was quite nice, to be honest, to have open up a few hours at a time. I thought it was just living and working remotely up in in Yorkshire that was the problem, but actually it was an Amazon Web Services issue last week. They're still shaking that off and looking pretty tasty. So we're through the biggest tech earnings. There's still plenty more this week. We've got BP out in the UK tomorrow, big FTSE component, and then AstraZeneca, the second biggest company in the FTSE, out Thursday. So there'll be likely big moves. They're normally up between 6 and 7 a.m. But when the stock market's open at 8 on Tuesday and on Thursday, I'd be keeping an eye on those stocks because they can move the index quite a lot.
I mean, that's over an hour, isn't it? Even more than an hour that it rallied. You could have literally gone for lunch, come back, and still got into a trade. And
on this one,
yeah.
Well, lunch. I mean, it depends what time you have it. This was at 8 o'clock at night. But yeah, it was
right, fair enough.
Maybe our American, maybe on the West Coast, they could have been having some lunch. But yeah, a lot of this was done within a minute, right? If you kind of missed it.
Okay.
Even if you bought after a minute, you would have been fine. To be fair on this one, but by the sounds of it, a few of them were a little bit more up and down. I find that you can just get filled anywhere, especially trading at these times. So yeah, I just don't touch them. Anyway, it's nearly my bedtime at that point.
So should we talk about oil and what's going on in the oil?
Yeah, tell me about oil. We were talking about this last week, weren't we? That it was, I say last week, it was 3 weeks ago I was last on.
Oil has been, on the raise for a few days now, for 4 days I think it is. Where are we?
We were chatting about it when it was in these lows, wasn't it? Was it?
Yeah,
20th October. It might have been prior to this actually. We were saying
it was about to go under $60 a barrel, wasn't it? And eventually it did hit. Well, like you can see there, $56 a barrel, and now it's just been sort of rallied up, and it's now in a little bit of a consolidation.
Yeah, we're back in its box pretty much. We had this kind of we're not quite back in it, but we're in this kind of rangy period for a while. We're still finding a little bit of resistance, to be fair, below these kind of midsummer lows. It's not out of the woods yet. We didn't quite take these lows out, which I always like to see if I'm going to really aggressively go long, to see some like liquidity drawn out the market. But I mean, just with what's happening with gold, this tends to be a precursor to an oil move. It can take a year for oil to really get going, but normally when gold moves like this, it's kind of a liquidity story, and then oil gets going because the liquidity really hits the real world. But this is just a supply demand story, right? We have the supply, we don't have the demand. It's going to stay down here, so the demand needs to come from all the extra money that's going to be thrown in the system when Powell walks away.
I mean, OPEC have finally announced that from next year they're going to be reducing oil production, because I never quite understood why they were producing more, even though the oil was obviously falling to like really low levels. So at least they're doing something now to curb production, so the prices can go back up, which is probably not great for drivers out there. But I mean, do we ever see it come down on the forecourts anyway? Let's be honest.
No, not as much. Well, it's certainly not as cheap as it was when. It's not half the price it was when it was at $120 a barrel. Let's put it that way. Russia are probably a bit at pains with this because they're just trying to produce as much as they goddamn can, right, and find basically India to buy it or anyone else, not dealing too much with the West. I know Modi and Trump have been having conversations about this.
Yeah, the net's closing in on that one as well for Russia, isn't it?
Yeah, and if they're, I know a lot of these countries are trying to just produce as much as they can because Russia, well, they just need the money for the war efforts, right?
Yeah.
So it's difficult to get everyone towing the line with the production cuts. It's a crazy market to trade, to be honest, on news. You really got to kind of avoid the news, I think, in certain ways. Well, the way that I trade it, I'd like to see some momentum and some more kind of technical flow sort of style trades come through. But this is such a news-driven market. You've got to be really, really on top of it if you want to day trade oil.
Yeah, I think for the UK especially, we definitely need oil to go up to kind of be making money because remember we showed the price per barrel for them to actually make profit, and for the UK it was about $50 or $60 a barrel that they need to before they can even start turning a profit.
Yeah, you're saying it's the UK as if we own the oil. Whereas actually it's BP.
Okay, yeah, fair enough. Yeah.
We sold it all.
True,
we got rid of all that decades ago. Norway didn't.
No.
That's why they're doing so well.
And also they've put in massive renewable energy as well. So they've got I think most of their country is literally run on hydro energy because of all the
fjords,
So they're definitely future proofing themselves, and they've got massive reserves of oil still. So
well, if only the weather was better, you might find me there, but probably not for me. More than a week at least. What should we have a chat about the week ahead and see what's coming here, because we do have a few things that are worth taking up.
The really busy economic calendar.
The joke that is the economic calendar these days. They still bless them. They're still putting it on here. Non-farm payrolls tentatively. I think they should change the wording a little bit on this to be a little bit more comedic.
Trump pending.
Yeah. We're not likely to get this week as far as we know. We're also not likely to get some data, although I think this is coming. Oh no, it's been removed. Fair enough. We had the core PCE was on this morning. I thought they might have to get that out in the way that they had to do the CPI a couple of weeks ago. Turns out they don't. So yeah, that's obviously been bumped. Things that are coming out. It's not going to take long. Let's do this. ISM manufacturing today, 3 o'clock. So this to me, we've got the open in half an hour, 2:30. Then probably makes trading the open. If you're a kind of swing trader, a little bit dangerous. If you're a scalper, you can probably do it. For me as a day trader, it's probably not a trade for me at 2:30, even if I see some nice action, because you're really restricting the time that you've got to get out of the trade. It's hard enough to get a good entry, a good stop, and a good target without like putting the clock on it as well.
Okay.
I find that to be unnecessary to add that extra pressure to a trade. So I probably won't be looking at this till we've safely negotiated 3 o'clock. And even if it'd be ideal if we don't safely negotiate it, if we get a real big surprise on either of these numbers, the headline PMI or the inflation number from the prices, that could create a little bit of interest for me in the stock markets and gold. See, gold has been quite nicely absorbed the last couple of trading sessions. They're trying to hit it down. Loads of sellers coming in, but the market isn't budging. So I feel like at some point that this is going to push. So maybe if we get some pretty weak manufacturing PMIs, that could tempt me to have a crack at gold on the long side today.
Yeah, I mean, maybe we should actually have a look at gold, because everyone, how everyone loves gold, especially when we're doing the live trading. Everyone always wants gold on their analysis.
I'm trading gold more than anything at the moment. I'm trying to call myself more of an index trader most of the time, but gold is just trading so nicely at the moment. It's so volatile. The ranges, we're up $30 on the day. It hardly looks like it's moved compared to recent days. That shows you the sort of volatility that you can get in this thing.
Do you think that we could be due a revisit of lower levels, or what do you think?
From the stats that I've seen, whenever you've seen a 5.5% decline in gold, which we saw on that 21st of October, on a 2-month basis, I think there's been 10 times this has happened in history.
Okay.
It's been higher than the high of that every time after 2 months.
Okay.
So I don't think it's over yet. I feel like this is just an inevitable washing out of the weak hand. So, you know, people have been buying this stuff for a while, right? But I mean, there'll be some people who are buying it in here.
Yeah.
And it's nice. Well, I say nice. It's natural for the market to flush out any weak positions, find a footing, which is what it appears to be doing. If you look at the deltas on here, it seems to be finding a fairly nice footing here. So if you were going to ask me whether we move up from what 4,000 up to 4,400, so you know, pop another $400 on rather than 400 off, I'd be more bullish than bearish on those.
Fair enough. So where does that leave silver at the moment? Because silver seems to sometimes closely follow gold, right?
Yeah, silver's been a really fun one, right? Because we hit
It's
basically
pretty much
all-time
the
highs.
same. It looks like the same chart. Did you even change charts?
Yeah, I mean, well, the difference with silver is we really haven't got away from these all-time highs. I think this was actually, I mean, I appreciate this is the futures, right? But I believe this was the Hunt Brothers squeeze. I was trading a lot of silver and gold back in a earlier time in my career, and this was on the spot market $50.
Yeah.
And we got there again when I was trading it mainly in 2011, and now we have superseded that.
That's a massive rally, isn't it?
It's a hell of a move when it gets going. But again, the volatility, I mean, you know, we say gold's the best performing asset this year. The likes of silver and platinum are outperforming it.
Yep. We discussed this a few weeks ago, didn't we?
Yeah, the alternative structures are nice, but I don't think you need to look past gold as a day trader because the spreads are so tight. And there's way more data that you can rely on, like the amount of volume that goes through on platinum and silver. For me, it doesn't really make sense to look at that from a kind of DOM or footprint style of trading. You need to kind of see volume in the market in order to justify trade. So gold's fine for me. But if you're more of a swing trader and you think it's going up, then yeah, you could do worse than have a look at the silver and platinum alternatives. Back above 50 needs to anchor that. Might be worth putting a little alert on here for me. I haven't done that yet. So if we can get ourselves back above $50, that'll probably spark a bit of life across the whole complex.
So remember we were discussing soybeans?
Oh yeah, talk to me. Go on.
I put the soybean trade in.
Yep.
3 weeks ago. 30% up now.
Yeah, I heard the news when it dropped.
I knew it. I knew it was coming. And my only regret is that I didn't put the whole amount in to start with. I kept adding to the position. I mean, look. But I actually read that if I'd because I just done soybeans directly. If I'd done soybean meal, I think it is.
Okay.
Then that actually. I picked the wrong soybean. That actually even went more ballistic.
Yeah, I mean, you don't want to be complaining about a trade that went like this.
No, true. 30% in 3 weeks, you can't complain.
And if it has more upside, the likelihood is it has more volatility and therefore potential downside as well. So you're more likely to get
I think
stopped.
if you go to a monthly chart or even, I mean, look at where we are.
Yeah, giving the stuff away.
You know, so my take profit is definitely a lot further up.
Okay, we're long and strong on the soybean trade.
Yeah,
very good. Lovely to see some.
So.
Love these abstract products that people trade.
My plan is to make a soybean holiday.
Very good.
I'm gonna earn a holiday.
Go to China.
Soybean.
Other news this week. Let's touch on these. Rate decisions. So Australia, not for me at this time of the night, but we got the Bank of England rate decision on Thursday. Thursday is a great day as traders. In the absence of big news, this could be quite nice for us to get things going. We got Bailey doing a press conference, which he doesn't always do as well, so I'm keen on that one. We do have some actual data again, preliminary consumer sentiment out from the University of Michigan, not a US government agency. Therefore, we will be getting this figure. Did I scoot past the ISM services and the ADPs? I think we touched on them briefly.
Yeah, we did that.
Wednesday. So there's not a huge amount for the first week of the month. You'd normally expect a bit more. Listen to those speakers to see if you can get a little bit of a budge from this kind of uncertain rate cut story for the end of the year.
I haven't seen it this uncertain for quite a while, right?
Yeah, I think we weren't far off this early on. I think we were like 80 in the 80 percentiles last time.
62% is really.
Yeah, it is a little bit, isn't it? But this is good because this creates volatility.
Oh, of course, yeah.
So these sort of environments are where you really do want to pay attention to data. I know Steve Myron was on today saying you don't want to be using economic data to make your interest rate policy, because it's so backward looking. You want to make your predictions.
Okay, yeah.
I know a few weeks ago he was kind of countered to that by the journalist saying, yeah, but your predictions are terrible. But we don't have anything else to go on. They are data dependent, at least until Powell leaves. So yeah, the little data we're going to get, ISM at 3 today, and on Wednesday, maybe a little bit of that ADP, that might be the sort of thing that shifts this needle one way or the other.
So have we got any UK data coming out soon?
Not a big week for UK data other than the interest rate decision. So I think the real focus is really on the Bank of England. Yeah, we've got German industrial production. Not too much to hang your hat on other than that in the UK. Middle of the month, we tend to have a little bit more. We
do have a budget coming out at the end of the month.
End of the month, yeah. So that's Thanksgiving week. Yeah, the Wednesday before the Thursday of Thanksgiving. So we're getting the... that's the latest it can be legally, I think, the autumn budget.
Yeah.
And yeah, we've got a few
some
things.
Very interesting things that she's put forward about.
Yeah, go ahead. What do you want to run through?
Well, it was I wanted to get your views on this. Considering a 20% tax on the assets of people deciding to leave the UK, so it's almost like they've made bad decisions. So businesses are wanting to leave. So they're right. Okay, what we'll do then is we'll just charge them on the way out.
Yeah, I mean, I quite like it, but it tells a story.
It does, doesn't it?
As to what people are thinking of doing.
It's almost like we know you want to go, so you may as well just pay us off and see you later.
Yeah, but then if we get paid off, then that's gonna plug the hole that we've been feeling in this yield story for a little while.
But is that sustainable? Because they'd already be gone, right?
Well, it's cash you wouldn't otherwise not get, right? So maybe it's not the end of the world. But if you look at the 10-year for the gilt, the 10-year yield is way down. We've had like a big decline here in the gilt. Yeah, well, it's good news. This is what you want. You want it. Okay. She needs yields lower. So the problem had been that yields were up at 28-year highs, right? We had this. Okay. If I can get back to like a weekly or a monthly chart. Not 28-year highs. Sorry, that was the Japanese ones. Yeah, 2008 highs. We were back there too. So, God, it's not far off 20 years. That's scary. The yields though have eased. So there have been other rumors that she's going to increase income tax.
Okay.
Because basically, we're spending more money than we're able to bring in. Yeah. So what then has to happen is you go to the market and say, hey, can you lend us some money? And they say, sure, but you need to pay us more money to do so. That's why yields go up.
Yeah.
So the fact that and she's been briefing, was it middle or early part of last week, she was briefing that they're going to do this extra income tax bump, which they said, which wasn't in their manifesto to do. But I guess she's going to say, look, it's all too freaking high. We need to get this down. Sorry, it's coming. So they just need to find a way to bring in a bit more money. I mean, Labour's supposed to be, for the people, right? That's the average working person, right? That's the sort of idea behind them as a party. But income tax disproportionately taxes working people, right? Compared to wealthy people who don't pay as much necessarily income tax. The more dividends, capital gains. I'm sure she's going to do some things on there, but yeah, from her voter base, you could see her. I mean, they're not doing great in the polls anyway, are they really? But yeah, it feels like a risky play if they were looking at trying to get another term.
Well, there was talks on capital gains tax, wasn't there? I think I saw it in this article here. Let's scroll down to here. So yeah, hasn't indicated actively reviewing it. So
yeah, seems strange to me. If I was working at that side of politics, that seems to be the sort of thing you would try and target. I don't know.
Just seems like I hate to say it, but the rich are getting richer and the poor are paying for that.
So it works. Here we go.
I know.
It's been a hell of a
Doesn't matter who
while
the government is. It's just the same story, right?
Right. Yeah, but it seems strange for them to be doing it that way. If they do end up doing the 2% rise in income tax and not doing anything on capital gains, it kind of seems like a strange way around to do it. But anyway, it's going to be probably good for the yields.
Yeah.
From a finance perspective, leave the politics well alone.
Yeah.
Yeah. From a finance perspective, I would say that's something needs to be done. Either spend less, which is maybe not that good at doing, or you're going to have to raise more money, and then everyone's going to get pissed off. Take your pick.
Yeah, It's yeah, between a hock and a hard place. Hard place? Hard place. Even.
Yeah. It's been a big
between
weekend.
a rock and a hard place.
It's been a big weekend, Russell.
Yeah, I've been DJing, so yeah, not a lot of sleep this weekend.
Good stuff. Well, yeah, I'm keen on sleep this week and getting my feet back under this table for what should be a good run to the end of the year. This is a lovely time. I guess that's the kind of last thing to kind of maybe leave on is this seasonality. Looking at S&P. Why I never really hate the autumn and the run up to Christmas, because actually it's one of the best times to trade as an index trader. You just kind of want to buy dips, and I know we talked about this a little bit last time, but as you get through the 27th of October, that's kind of the seasonal swing low. This date is a little bit old actually; it's back to 2021 and the 20 years before, but you still see the idea. Generally,
so this 80%. Is all the every year collated, is it?
So this is 20 years.
Okay.
From I guess 2001 to 2021. During that period, so 16 of the 20 years were up in November, 2.2% if you take in all the gains and losses and work it out together. So November is a hell of a month for the markets. Only April exceeds that, and it's just as consistent. So. And it's month beginning, right? So in 20 minutes, pension funds in the US will have new capital from everyone that was paying in, and that money will trickle into the market. And you'd be looking at this chart, you'd be thinking, do I want to wait till the end of the month to do the buying, or shall I just get it done? I would have thought we've got at least a chance of a positive uptick on stock markets over the course of the next couple of days, in the absence of bad news. And then in terms of targets, the S&P 500, you really want to, if you can get through 6,900, then that looks like being the place to go. That would do me for today. Closed at 68.40. We're due to open at 68.60, I think, at the moment. So if we can, nudge into 80s, probably take a bit off 90s. But if we can close above that, then I'm probably going to retake some on the long side. Yeah, let's see. Feels like we're well poised.
I hope you have a good trading day then.
Well, I'm going to try not go too big. I've been trading off a laptop and two other screens for the last couple of weeks, so it's been fairly calm. But now I'm back in here.
Now you've got all the
bright lights. Yeah, just always good to ease yourself in day one.
That's it. Yeah. Okay then. Well, I think we should probably wrap it up there.
Sounds good, Russell.
Yeah. Okay. Well, thank you very much, guys, for joining us. Hope you have a good trading week ahead of yourselves, and remember, trade safe. And from me, Russell, and
Chris Pollock,
thank you very much, and goodbye.
Thank you.